Ladies and gentlemen, boys and girls, as always, I'm here to kind of take questions from you guys about what you're looking at in the market, what I think might be happening with any of your individual names. But before then, you need to hear me waffle on my thoughts of the market and why I think we could be chilling out here for just a minute after this overall market environment. And the main thing I want to look at here is positioning data. So positioning and sentiment, right? So we had this pullback last week. I talked about on Friday when I was here with Jordan how insane these view apps have been working, where it comes in and just gives it a little touch, and then we bounce from there. Now, today's kind of action is meh, right? There's not really much happening. If we take a look at the 5-minute chart, we finally broke the opening range to the downside after a whole morning of nothing. Right? We finally broke here, and again, just been doing a whole lot of nothing, and that makes perfect sense based off of what we've seen in the market and what we have going for the week. So that's something I want to cover here. And yeah, so as always, ask in chat. I have it open right here, and you can let me know what it is you want me to look at, and I'll go through them all. So right, be patient. I just kind of go from the top to the bottom there. So first of all, historical AAII sentiment. So this is just a bunch of old guys getting asked what they think is going to happen in the market in the next 6 months. For the last 7 weeks, this has been bearish. More bears than bulls. Everyone's been bared up, talking about the end of the world. And this is the first week that has flipped. So very slightly more bears than bulls. But you can see, if you look at this chart, right, more bears, 43% bears and 32% bulls, and then 49% bears and 28% bulls. And the market's been hitting all-time highs as this has been going on. And then last week was a little bit about even, but this week you can see the amount of bulls hasn't moved. People haven't gotten more bullish. Just some of the bears have moved over to this neutral camp. So that's, again, it's not a huge shift, but it's enough that I go, okay, they are starting to a little bit kind of back off and say, okay, maybe it's not the end of the world after all. Now, for me, I always look at these as contrary indicators, right? So when I'm talking about this, I'm talking about this as these people are wrong, and I want to be on the other side of their incorrectness. So just FYI, that's what I'm looking to do here on this individual chart here, is just say, okay, these guys at extremes are usually really, really wrong because they've been bearish the whole time and the market's been grinding higher the whole time. So if we're going higher and everyone is bearish, then that's what I like to see. It's kind of like having a short squeeze, if everyone's on the wrong side of it. So that's one piece of, okay, that's normalizing a bit. That kind of forced demand of people have to buy because they're bearish as the market is ripping. That's coming down a little bit. Now let's combine that with some here, some data when it comes to looking at the positioning. Sentiment is just asking questions, right? How do you feel? What are the vibes? This chart right here, and we're looking very closely at the red line down here. This is the amount of people who are either long or short the market. This isn't a vibes thing. This is, if you place a futures trade, your broker reports this to the CFTC, and every week this number gets updated. And you can see at this line kind of going down as the market's going up. And that means people are shorting more and more and more as the market's moving higher, with a low of 225,000 contracts short as the market's hitting new all-time highs. This is another thing that I think has been a lot of fuel for the fire, is people are, right, they're short, they're wrong, they're short, they're wrong as the thing moves higher. That's obviously going to be good for the people who are in the long side of things, right? Now, as things are starting to normalize here as well, where now they're only short 173,000 contracts, it's kind of like that slight shift in the sentiment from bullish to, or from bearish to bullish. It's not, they're still short 175,000 contracts. It's still a lot of contracts to be short, net short in the market. So that doesn't make me think, oh, okay, it's all over now. It's all done, right? Because they're usually net long contracts, and now they're net short contracts. So it's just like a little bit of air getting taken out of the balloon before it popped, which means a big surge higher. It's kind of unwinding just a fraction, just a little bit. If we go into the Russell, this has been the real bad candy. They were more short the Russell right here at 2200 than they've ever been before in like history. And now that's starting to bleed off. So from 90,000 contracts to about 50,000 contracts. So I've been pounding the table. I've been coming here every week, coming on the show Friday every week and just saying, doesn't matter. It doesn't matter what, if the government's shutting down, it doesn't matter if, it doesn't matter if the government's shutting down, doesn't matter what jobs say, it doesn't matter what the Fed says, doesn't matter any of this stuff. If Godzilla marched on Wall Street, it wouldn't matter because everybody is short and the market's moving higher. So they're all wrong. So every downtick that happens, there's people who have to buy. And that's what creates short squeezes, right? It's one of the reasons that I love this is because you can see where they are. You can see where they shorted and you can see that they've been wrong the whole time. So that really me pounding the table over and over again saying, I want to buy stock. I was long on margin. That is starting to unwind just a little bit. So I'm starting to kind of pare down just a little bit as well. Because as soon as this number returns to neutral and people are bullish again, well, that's a sign that there could be a potential top there and we could pull back because there's no longer that forced demand in the market that you have to make up for. And that's the biggest thing I'm going to look for. Now, the reason the market's not doing anything today, and I don't think it matters what happens today in the overall market, is because if we take a look at the economic data here, you can see nothing happened today. What we're looking for is these red lines right here, right? This one, because what happens is, so this is FinViz in their economic calendar. There's a lot of places that do this. And what they're doing is they're essentially saying these are low impact events to high impact events. How much do these events normally move the market? So you can see nothing really here today that we care about. But tomorrow we have potential government shutdown, which is a big deal, and Jolt's job opening, which is also a big deal. And then if we scroll down to Wednesday, we have another big red event. And if we scroll down to Friday, we have a whole bunch of red events. So this is just saying that today there's not a lot going on. There's a whole bunch of events coming tomorrow and later in the week, but nothing really happening today. So that's why this kind of do nothing day, I think, makes an insane amount of sense for the market. Because if the market's not going to do anything all day long, then if there's no economic numbers, if there's nothing to really like, push us out of the area that we're in, it makes sense that we're going to chop around sideways. So for you like super degen hyper scalpers, I don't really trust the long side of the market. I don't trust the short side of the market. As you guys know, I'm a quant. I'm a systematic trader. I've got a bunch of day trading bots going. They're buying things as they're moving down and selling things they're moving up, basically betting on this range day. And so far, it seems like that's what we're getting here in the market. Okay, so now that you're no longer forced to hear me rant about the things that I like, except MindMed, you're going to see me bring up this chart a couple times during this as well, because I've spoken a bunch of times with you guys. I am very long this company. I think it's a great looking name, and we finally got a breakout after 3 to 4 months of just nothing. So I'm watching this candle closely, see how well that holds. But between me staring at this MindMed chart, I'm going to take a look at some things that you guys mentioned. So again, put in chat here, but we'll start here with Lulu. And this looks awful. Lulu broke down. It had this base that has been moving. It's been doing this base for years. It's been just consolidating sideways in this range for a very long time. It made this high in 2020 and has done nothing ever since. And as soon as it broke this big base to the downside, that was kind of it for me. I'm no longer going to be interested in Lulu unless it can claim back 250. Then it might look a little bit more like this Eli Lilly chart. That was kind of the same thing, right? Makes a high and then spends a year. We're on a weekly chart now. Inside that high, broke down, but then quickly reclaimed it. That to me might be interesting from the upside, but this to me looks like a distribution, which just means that this is kind of an accumulation phase because it broke out higher, and now this is potentially the distribution phase and the move lower. And I look at it like Eli Lilly could accumulate some up and coming drug company. like a mind melt or a psychedelic company or CBD with the video that was released. A lot of things could happen for a Eli Lilly or a drug company to quickly change what it's going to do. A Lulu, what is it going to do to quickly change its fate here as a company that is, from 500 to 176 and breaking down and bleeding lower? What dramatic shift can they make tomorrow? They're not going to invent yoga pants 2.0. So I look at it as if there's a recovery story in Lulu, you've probably got time. You can wait for it to stop being in a downtrend and start being in an uptrend and be okay. If they're going to be a kind of in favor again, a fab type of thing, that's fine. For a short-term trade, if you're saying this is a little bit oversold, maybe, but it is what it is, right? It's these things come and go. And I look at something like Nike, right? Same deal, right? Nike had been a monster for a long time, then topped at 170 and has been downtrending ever since. Maybe I'll buy Nike someday, maybe, I don't know, but it's what it's going to need to do is something like it's doing now, where it makes a low and then it bounces and then potentially makes a higher low and then digs in here and then starts to move higher. I don't worry about waking up one day and Nike's back to $200 a share because they invented mega shoes. So it's retail. The turnarounds are usually take a long time in retail because people will notice a little bit of better sales, and then maybe a little bit better sales, and a little bit better sales, and then that will start to catch on, and things will start to move higher, which makes them good long-term investments. Like if you look at Nike when it was trending, this was an amazing trend. This is a 7x over just a number of years of this thing grinding higher, but you don't get generally fast moves that you really have to react to super quickly. RR is another one. Reich Tech's Robotics. So this is a completely different beast, right? This is the other side of the coin entirely, right? Lulu's a big, slow company that can move forever. This one looks a little bit more interesting. Some obvious resistance up here at 5. If we take a look at this, right, very obvious resistance. Hit here, fell off. Hit here again, fell off. And so I think your trade here becomes pretty simple. I'm not one that I'm going to overcomplicate technical analysis and tell you it's some magic bullet or be all end all cure. I'm more of a pragmatic when it comes to it. It's why I'm a quant. It's why I do quantitative stuff, is because I go through and so everything I do is right. Here's my website. It's Stats Edge. I do everything with kind of detailed breakdown statistics of can I prove the thing works over time. That's more or less how I look at the market. So technical analysis becomes really simple at that point when you have tested the MACD and it's no big deal, and you've tested right, the RSI and it's no big deal, it really becomes what's the trend and where is support and resistance. And the trend of this one looks great. From 50 cents to $5 is amazing. I see the name robotics there, so I know it's in a hot sector, and you've got a pretty clear level. So for me, if I was structuring a trade, if I wanted this thing, it would be very clear of above 5, I'm interested. A couple daily closes back below 5, I'd get back out, and I would take those small hits 4 or 5 times if I had to in order to end up getting a potential big payout if I end up being right. Snapchat. Kids are still using Snapchat, I guess. This is just a really long low base, and I like these low bases when they exist for this long. This is a company that's kind of been left for dead, and it hit $13 in 2022, May 2022, and it's done nothing ever since. Now, for these bases to work, generally speaking, you want them to be breaking out to a high point. You don't want to really get into these bases so much at this low level. You want this accumulation to happen. So for me at Snap, it would be a break of, say, this $13 area right here. First of all, I want to see a break of that, and then I want to see a pretty quick move to 17 or 18, because these low bases can exist for incredibly long periods of time. Now, if you wanted to take what my mentor used to call a basement window trade, and his idea there was pretty simple, right? If you want to jump out of the window, you might as well make it the basement window. It makes sense around here. You're putting your stop at like 750, so you're buying at 850, you're putting a stop at 750. you're risking a buck. And then if it moves higher, then potentially you could make more than a buck. Now, what I would say is that understand that if you're taking a trade like that, it makes a lot of sense to have a time stop that we call them. And a time stop essentially meaning just that. You put a, I've also heard it called a shot clock, that might be a better term for it, where you're just giving an amount of time and you're saying, I want this move to happen within X period of time, or I'm moving on. I'm done with this stock. I'm moving on with my life. I'm not going to trade this thing anymore. And the reason for it, and the reason that's so important, is because if you don't have that time stop, then you could be in this dead money forever. And that sucks, right? Just to be in a company that does nothing for 3 to 5 years while we have the market ripping to all time highs. It just means that you just should have just bought the S&P 500, moved on with your life, right? So I would rather take losses than to be in something like this that's just kind of chopping around forever. So that would be, again, a good way to structure it. You're buying it at, again, 850 here or 860, and then your stops at like 750 or at 650. So $2, sorry, risk. And then, if you're right and it gets this prior high, that's a double. And then if you're right and this thing really recovers, well, you're talking like 1,000% over time. But I would just not give it forever, so you're not sitting in this until the end of time. And I think PayPal is another question you had, PYPL, and it's probably the same. Yeah, same story, same kind of chart. So I'll summarize it by saying same thing, right? Same. If you get a nice breakout here, great. If you want to take a shot at this kind of support and lean against this 56, which is pretty low price, same idea there. You're looking at this wedge. Just don't let it be dead money. Dead money just sucks. No one likes dead money. It's like, oh, I could have literally done anything else with my money. I could have left it in the bank and done better. AQST. AQST. Well, this is an interesting one. This kind of reminds me of that MindMet chart I showed you guys earlier. And, right, prior high, prior high, prior high, prior high. So we have highs around $6 that we just hit over and over and over again. It looks like we're trying to break that now. So just like I talked about with that robotics company, I think this would be the same thing. Is you've got such a clean area. The market is very rarely this easy and clean, where you have a huge line in the sand where every time it has gotten to this in the last 4 or 5 years, it's reversed. So you could just simply do I'm going to take it over 6, and if it gets back under 6, I am wrong or early. It's time to move on with my life. If it can hold over 6, then that is super interesting. ELPW. This stock's probably going to 0. I wouldn't touch it at all. And there's no technical analysis to be done on something that does this. Goes from $3 to 30 cents in a single day. That to me feels like a rug pull. It's probably on its way out, on its way to 0. Doesn't mean, again, if you've got some reason you think it's going to bounce 50 cents, that's a double. You can play those. Just good luck. Have fun. Not something that I would touch with anyone else's money personally. GameStop. GameStop is interesting now, and I know your name is GameStop fan investor, and just FYI, I'm not a subscriber of your guys of like the weird conspiracy theories about shorts never covered, blah 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 blah. It's all horse caca, but it's very interesting base breakout, purely technical. If we're talking here, had a nice breakout of this base. So far, we haven't come back to touch it. So this is a nice bull flag after a base breakout. Just shows there was some accumulation going on here, probably some institutional accumulation. That looks great. What I always say with these meme stocks is take this completely out of your mind. Don't even zoom out on this chart, because this is something completely different that happened where everybody was short GameStop. Short float isn't really even that high in GameStop anymore. I'd take a big zoomed in look of this one and say, okay, could this thing go to like 30 or $40? Is that your target? Yeah. Could it go to 50? Maybe. Is it ever going to go back to, multi-$100 a share? I don't know. Right? It's no longer a company that has anything to do with selling people video games. It is just a private equity vehicle for the CEO. So that's, I think, what you have to value it off of, right? They own so much Bitcoin now that they're kind of one of those Bitcoin treasury companies. So you have to look more on the crypto side of things than anything else. Where if Bitcoin right now it's doing well, and that, if you line that up, it's likely also because Bitcoin's doing well, right? And you have to kind of preface those two things. If you own a lot of Bitcoin, you are tying your horse to the crypto side of things, which is what the GameStop CEO has decided to do, for good or for ill. You're a crypto company now. Congratulations. But yeah, nice base breakout. I wish I'd gotten the base breakout. I wouldn't personally be chasing it up here, but if I got the base breakout, I'd still probably be holding. Speaking of stocks that you definitely don't want to anchor to a prior high, here is Tilray. This is another kind of mania name, right? That this is. Can I do the float? Well, let's just drag free float. Yeah. So this is an important chart. Same with GameStop and same with AMC, but not to the same degree with GameStop. They did less dilution. They did a lot of dilution, but less. There is a time in which a price chart isn't enough. And it's when your company is like this, which is to say, so incredibly bad that they have to constantly raise monies off of shareholders. Same thing with AMC, right? AMC is the kind of the perfect example. If you owned, for example, if you own 10% of AMC up here, say you own 10% of the entire company. Well, right here, you own less than 1% of the company, which means if this ever gets back to $20, then it's worth the same as it was up here, right? So I just want to say it again. If AMC ever gets back to $20, it's worth the same as it was up here at 200 and something dollars. So if it ever gets to $200, it means the company's worth 10 times more than it was there. So again, a 10% shareholder here, or if you were short 10% of the company, well, now you're only short 1% of the company, right? So that's what dilution does. It just makes your ownership worth less and less. And this is another horrible culprit where they have gone from, where is it? Ooh, is that right? Wow. From 17 million shares right here to over 1 billion shares. So so if you owned 100% of the company right here, the whole company, you own 1% of the company here. So the reason I do this rant is it's just important to know that if this ever got back to $200 a share, it is the most valuable company on planet Earth. It is more valuable than Nvidia. It's more valuable than, right, basically Nvidia, all the Mag 7 combined. So that's why you never anchor your expectations to anything that any of these crazy movers have done. You can't do that. You can't anchor your expectations there. You have to set new expectations and bring down those expectations, because I'm sorry, but a weed company where weed literally is called weed because it grows everywhere is never going to be the most valuable company on planet Earth, right? So the question now is, where is it going from here? So basically, I just wanted to say all these people they're done. They're never coming back, right? It's over. However, if you just zoom in, well, now you can do some analysis on it. So, we saw that Trump made a CBD whatever thing yesterday, and that's what's causing a lot of this movement. And the question is, how much will that hype get you? Now, what's interesting to me on this one is that, right, it was $2 and now or roughly $2. Now it's come back there. So that's a big kind of rounded base. And the chart actually doesn't look horrible right now. Look at every earnings report that it beat. The question I would be asking is, are they profitable? Which the answer is no. And how can we, how do we know when they're going to have to raise more money off of retail's back? They have to. They're losing money. You have to go to retail and you have to say, I am taking shares from you, and so you give me money. That's, again, has to happen. Not a choice, not a question. This has to happen. So now that we know that and that has to happen, again, the question is when. So I would look at things like what is their burn rate, how much cash they have on hand, things like that before I'd get involved too much with that. Again, it doesn't matter what the stock's going to do if we know who the seller of this company is, and the seller of this company is the company itself. So when are they going to cover? I don't know. AQST. Already talked about this. TMDX. This is a new one. Transmedics Group. Well, it's funny because I had this wedge drawn here before, maybe because someone else, maybe even you, asked before, and that wedge breakout looked great, and now I just see the exact same thing happening. So we kind of have wedge breakout 2 happening. And so the reason, little CMT lesson here. The reason that you see technicians draw so many wedges, because there's really only 2 things that we know about the stock market that it's been heavily studied. It's not up for debate or question. These 2 things exist in markets. One is price is trending. Asset prices trend further than people think they do, to the upside, to the downside. Asset prices trend. Stocks go up, gold goes up, Bitcoin goes up. Things trend over time. When stock prices go down, they'll generally speaking trend down over time. That's one thing. Stock prices, asset prices in general trend, right? That second thing is that volatility is mean reverting, right? Asset prices are not mean reverting, which means if a stock goes down, it doesn't mean it'll go back up. If we have, so they trend over time. Volatility, however, is mean reverting, which means that when volatility is low, eventually it expands. And when volatility is really high, eventually it contracts. We don't know if timing these 2 things, that's the hard part. But those are things that we know for sure. So with something like this, volatility, the reason we draw these triangles is because volatility mean reverts, right? So we are getting really, really tight here, which means the volatility of this particular security is decreasing. So one would bet that there will be a period of expanded volatility, and one would bet that it's going to happen in the way of the underlying trend, which is higher. Of course, trends reverse eventually. Of course, right? Things go up and down. But when I look at something like that, I say that's essentially all a bull flag is. So that is the origin of the bull flag that everyone has talked about. You're looking for a trend in which volatility is now mean reverting, and then potentially another lag higher. So when I look at this, I say if this continues to consolidate for a bit, and then you get an upside breakout, it looks like a perfectly fine trade to maker thing to add. GMA underscore. And I hope that helps. Why? GMA. I don't say GMAC. Someone asked for GMAC. I don't see that here. Yeah, so that's why, again, that's why you see, traders draw all these triangles, not because they're magic. It's just a way to visually representate that volatility mean reverts. Another way to do it, if you just want to kind of math it, is you can do the Bollinger bandwidth. This is another simple way to do it. This indicator now on the bottom. And this is just the width of the Bollinger Bands, which a lot of people have seen. And Bollinger Bands are a volatility metric, right? They're how much is the stock oscillating around a 200-day or a 20-period moving average. So when this is high, and you can see if you scroll out on pretty much any chart, you can see the mean reverting nature of volatility, right? Volatility expands, then it contracts, then it expands, then it contracts. And we have a big expansion, then we have a big contraction, right? Over and over and over again. So that's what most traders are just trying to do. They're saying, what's the trend direction? and then what's the volatility of that trend direction. And I'm just going to, so like LMND is very low on our volatility scale right here. It's in a nice uptrend, and it has very low on the volatility scale. So the hope is that you have another expansion in volatility, which is the last one happened right here, and that happens in the underlying trend. So I like the look of this one as long as it holds this $50 area. Because if we do get that volatility expansion and it happens in the direction of the underlying trend, that's where profits are. Profits are not in very low volatility areas because the stock's not doing anything. So you're trying to predict that volatility expansion. You're trying to do it in the direction. It's also what options players will do is they look for options that are cheaply priced, and they'll be cheaply priced because volatility is one of the components of the Black-Scholes model that prices options. So with that being one of the components, if you look for volatility to be low and you buy your options then as volatility expands and hopefully price moves in your direction, you're making money off the volatility expansion and you're making money off the price appreciation. That's the idea. That's the game. And then conversely, people will sell options when volatility spikes, is because if the stock just doesn't move, then they make profit as volatility contracts back down. There you go. Welcome. Thank you for coming to my TED Talk. So this one becomes pretty obvious to me. Right? You've got a clear support here that happened before, kind of $49, $50 area. Looks like it's digging in right there. For me, as long as you're above that, you could be potentially long. If you lose that, all bets are off. Probably time to go there. CIFR. Cipher mining. Well, anything mining is going to look amazing. Because if you look at the GDX, which is just the mining index, this thing has just been on fire, right? So CIFR, all metals, all mining looks great. This one's challenging an all-time high here at 14. That's where it kind of bounced off and came back to. So I would be less interested in something that just went 200% to hit an all-time high. I think this looks like it needs a little bit of time. Now, if we look at our Bollinger Band width at the bottom, you can see the bands are very, very extended. And you could put on Bollinger Bands if you just want to see it, right? So over here, where the bands are tight, you can see it's just showing that the bands are tight right here. And then up here, where the bands are wide, you can see it's showing that the bands are wide. So going on with our theme of today, of volatility expansion and contraction, this feels like a period of time in which it needs some volatility contraction. So you need, doesn't necessarily mean the price needs to come down, it just means time to chill out, time to move sideways, right? Again, just because I want to check on MindMed and to talk about MindMed, you can see, right, same pattern here. You had this massive push up when this went from $6 to 10, so almost a double right up here. And then as it moves sideways, again, you can see this volatility contracting to near zero. And then on Friday, we had a little bit of an expansion. And then today that's continuing to move higher, right? And again, nothing is perfect. Nothing is 100%, but just shows last time we had a big volatility expansion, a huge one. This thing went from $2 to, yeah, it went up 400%. Not saying it's going to go up 400% now, but just kind of the thing that is possible with an early stage bio. UNH, full disclosure, I'm in UNH. I'll always, unless I forget, I will always tell you when I'm in something I'm about to talk about. I got some in around this kind of 250 on a second try. I bought some at 250 here, scalped some out, took the rest out on a stop somewhere in this area. And then when it recovered back through 250, I got involved again, took some out. And again, just this is like an investment for me now. I figure I got a really good price on something that, you know, could be there for a while. Nothing really to look at, nothing really to say, right? Just consolidating sideways after moving higher. And it's kind of in the middle of this massive range that it's been into and kind of right in the middle. So this to me is, unless you have it, stay away. If you're looking for a trade in it, I don't think there's anything going on. I would look for catalyst events and catalyst dates like trials and things like that. It's a lot of rocky news to have. That's why, again, I sold a bunch of the position like almost immediately, and now the rest is just, I own some at 250. If it goes under 250, I guess I'll get out. But this is kind of a long term type of investment. GCT. GigaCloud. What a name. Good for them. Looks like either a huge wedge or a cup and handle here. A big wedge going on like that. So I would just treat this just like any other wedge. The trend is obviously higher, and it's getting tight in the direction of that overall trend. So a nice breakout here would be great. One thing I did definitely want to say is just to show that, is just to say that in case you've been living under a rock, we are in an epic bull market. Things are just like exploding higher. An epic bull market. So this is the kind of chart you want to buy, is breakouts and everything in a bull market. If your stock is just cratering right now and is at lows, you really have to ask yourself why, because everybody is making money right now. So it's one of those, if you're not making money, maybe. So this is a good looking one. Again, if it can get through this little zone right here. So, on the shorter term chart, that looks cup and handly. Big cup here, then a potential little handle going on right there. That's again, nice look there on Gig Cloud. Someone says my med looks great. Yes, it does. Again, talking my book dramatically. So nice looking breakout there. But again, full disclosure, I'm in a bunch. LUMN, Lumen, Luminin Technologies, range bound. It's just like the first thing that comes to mind with this chart is we are stuck in a big range, like $8 to 250 is a huge range. But we've seen that high and then a pull back that low, and then people said way too expensive up here, way too cheap down here, probably somewhere in the middle, and that's where we're hanging out. So when I look at a chart like this, I'm not super interested from the long term. I want to see it at a major high to potentially take a breakout, or at a major low to potentially buy support. When you're messing around in the middle here, it just becomes way harder. You're making your life much harder. So I would set an alert here at 9. I'd set alert at 3. Check on it in a couple months. Short term, same kind of thing, right? Short term, you are inside this range. I delete. No, I'll just draw another one. All right, short term, you're just stuck inside between 660 and 550. So the same thing. If you want to take a shorter term trade, you want to take a trade inside the longer term range, I just think you got to break out of the shorter term range first. And while you're just hanging out doing nothing here, if you own it, fine. But if we get a big break either direction, then that's when you look at it. All right. So next, BASA, BASA. Is that actually it? Oh, it's probably this one. OTC. OTC stocks are always terrifying because the reporting requirements are near zero. A 3-cent OTC stock is just not something that I would touch. You're gambling. I hope the gamble works out for you. There's also no technical analysis to be done on a chart like this. Apologize if you hear dog barking in the background. I've got someone coming to fix something at the house, and he's defending us. A gold pullback, I don't know, right? So again, I bought some gold, full disclosure, right? I own gold. I think everyone probably owns gold. Bought a little bit on this breakout. I wish I could say I'm still holding that full lot. I'm certainly not. I sold a bunch on the way out, but it already had its consolidation and then a push here. So the comment was just is right, gold maybe a pullback. You got to remember with currencies, or not currencies, with commodities, and I always like to look at this coca chart because I think it's a good example. This is what commodities do. They do absolutely nothing, and then they do absolutely everything. So, right, this coca chart is interesting because this is 2018, 2017, all the way to 2023. Coca did nothing. If you were trading it during this period of time, you were so mad and you just wanted to like rip your face off because the thing's just not doing anything for years and years and years. And then all of a sudden, you get a breakout and you get a pretty substantial breakout after that. And then it goes up like 400 or 500%. And that's pretty common across what happens with currencies. Commodities. You get long periods of time where absolutely nothing happens, right? This is 2017 to 2021 in copper, and then we have a nice breakout in copper. And then it's done nothing ever since. So this is 2020, and now we are in 2025, and copper's done absolutely nothing. It's just the way they work. So when they start doing something, I certainly like you're either in on the breakout or there's nothing for me to do. You know, again, I still hold some. Who knows how far gold can go? It seems crazy to me at this point. Maybe that's just me being mad. I still don't hold enough, but it seems a bit wild at this point. I just would never step in front of commodities. Just seeing how they move like that, I just couldn't do it. And bought nothing. I don't see. And bought medical. Looks like a nice rounded bottom that I drew and a nice little breakout of this that I drew before. But it's got all this resistance overhead. Is it one of those? Yeah, it's one of those. Uh, it's never getting back to, I don't know who has to hear this, but it's never getting back to $200,000 a share. That's just not happening. So the question is, can it move somewhat from here? Yeah, but you know, you need to get through 450 before you do anything. This is one that I bet that their float is now pretty huge. No, only 45 million in this float. Interesting. But yeah, it's nothing's happening really in this name. HITI. High tide. Really nice long base. This thing's a new issue. At $5, went all the way to 80 cents, up to $12, back to $1.20. That is a wild ride for that one. So it's a retail specialty stores, whatever this is. Oh, high tide. It's got a little marijuana leaf, I think, is the thing. So that's probably what's going on there. And just some nice sideways consolidation. Someone's asking about SNDL, so it might be good to have just a big chat, which is breaking out of this nice base. I have an alert just up ahead on SNDL, just because I like companies that are priced to go bankrupt, and then they just never do, then they break out. So this is one that I'm really looking at adding or buying some if we can kind of break above $3 or so as a long term. I'm going to buy it here. My stop's going to go at the low, right? I know I'm risking like half of my money on this particular trade, but if I'm right and the thing goes to 10 bucks, it could be like a 5x. It's the same. I love these long bases of people just leaving these companies for dead, but I think that leads to an overall theory on MSOS. Now, full disclosure, right? I had a trade in MSOX before earlier in the year that did great, and I bought a little bit more today as this thing held because if you missed it, Trump did a whole propaganda piece, I'll call it, on it's not Twitter. his own social media that's only him and people care about him. Um, but it was like, hey, CBD is good for you. It's like, okay, we know. Now, again, this is all coming from a Canadian who has been, this stuff's been legal for years, and everything's been fine. The um, the idea is that if they're going to legalize the CBD side of things, that's only going to benefit a handful of companies. And like Jazz, I think is the only one with CBD that's like FDA approved. That's why you see I have this little drawing on Jazz. I'm looking for a breakout, and I'll take this Jazz Pharmaceuticals. I don't think, and they might be, but I don't think based off the video I saw that he's talking too much about THC or getting people nice and stoned on the street. It seems like more of a this is a medical benefit thing, and let's or reschedule it or whatever so that it can be more a medical thing. So, a couple of things. Just like I said with Tilray, these companies are never going back to where they were. They've had to dilute their shareholders so much just to stay alive that they're not going back. I mean, Tilray is not going to be a $400 company again, right? MSOS is not going back to $50 a share, right? So first, temper your expectations. That doesn't mean there's not really good gains to be made, right? There could still be really good gains to be made here in all of these. The just know that, right? So there's two different people, right? I'm talking to. One is the bag holders that have been long weed stocks forever and think they're finally going to get rich. I disagree. I could be wrong. I'm sorry. Uh, I apologize. Maybe it does. Good for you. You can have a little copium there. That's different from the people who avoided it while it was in like one of the most epic downtrends of all time. All you had to do is not be involved in this, and you made more money than any marijuana investor in history. But now, like I've been talking about with these low bases, now it puts in a low base right here, and then it starts to move higher. And this is why I talked about the MSOS, and I did MSOX for any of you degens. There's a leveraged MSOS play, which is a basket of all these stocks leveraged. That's what I bought here today as well. So I'm speaking purely to the people who are just looking at the industry now. Those other people, I'm sorry for your loss. You have a nice tax write off, I guess, if you ever realize it. The nice push that we had here hasn't been given back. They haven't pulled back in that name. They haven't really been giving back any sort of ground, which is great. And now it looks like we're potentially coiling and moving higher again based off this news. So when you have a news event and a news candle like this, what you're looking for is this going to be a sell the news event? If it is a sell the news event, then you've got some problems. And it should show itself in a couple days, right? This thing will close red and then continue over the next few days. If so, again, big old sell the news event. I'll take my loss. I'll move on with my day. If this ends up being something that's digging in and is finally the rescheduling and whatever that everyone's looking for, well, you'll end up getting a push up through here. I'm really interested to see what will happen when it gets right here. This is the election. So after the election, people dumped shares of the marijuana companies, just thinking that the Trump administration would have no part of it. Looks like they've been dead wrong. So that to me is interesting because there's potential shorts and people who sold their shares that are going to see the shares get back to that price. That could throw a little fuel on the fire. Right? Anyone who's shorted here and said, okay, Trump's winning, so let's sell our shares, and then it gets right back to it. That's funny to me that there's people who just take bets based off who's president. Uh, and then if this thing moves higher, then those people are underwater. Those people are going to cover. So I could see a world in which MSOS is like 12. I could see that world take place over a period of time. I cannot see a world in which MSOS is like what $100 or whatever it was before. So that's my whole The whole synopsis and all of the weed companies will fall into that. You need to see a couple days of they're not selling back into this news. And when the reclassification happens, or rescheduling or whatever it's called, you need to see the same thing, right? Give them a little bit of time and then have them not fall apart right after and fall apart dramatically. You want to see that hold for a period of time. And if those two things occur, and then I think it's more interesting. I wouldn't be as excited, I guess, in a big pop up in my position here as much as I would just like to see it hold for a long time. It's actually something I put out on StockTwits right before I started this with MindMed. I don't need MindMed to like triple overnight. I'd love it. I own a disgusting amount. But if it breaks out here and it just sticks the landing, like give me the week of it just kind of hanging out between like 12 bucks and 11.50 or something like that up here, then it's could push way higher after that, right? Okay, so just a couple more real quick, and then we will call it there. One is CHRS. This is another one of these guys. From $30 down to $1. So the CEO is doing a great job. His stock is down 89%. The shorter term chart, yes, it's kind of that low base look. I would need to see how much money is it losing? What's the dilution look like? Because they're going to dilute you. Right? It's if you lose money, you're going to have to get diluted. And anything hanging around this buck, I get nervous about, because if you're under $1, you have to do a bunch of financial shenanigans to stay listed. So it's been nice recently. You just got to think that whatever they're coming out with, they're close enough to launching that, or they have a cash runway to it. And that's what some part of the research I did here as well, right? So these guys have like $250 million in cash, and they say they have a runway to 2027. So I look at that and go, okay, at the very least, it's not going to be the company selling me shares. I don't want that. Right? It doesn't mean the stock needs to go up. It just means it won't be the company that's selling me the shares if the stock does go up. CRVS, this one looks a little bit better. Right? It did its dip under $1, but now it's hanging up near 7. And this looks like it's almost, I don't know, maybe the data just didn't load in. Yeah, so no reverse splits or anything crazy there. Wild action though, right? So a high of 9 and then a low here of 2. It's just really messy. This is a messy range bound chart. I don't really see anything to look at here. We'll do a GMA on the Canadian exchange. Well, it's the TSXV. So Canadian exchange, yes, but the junky Canadian exchange. Nothing to be looked at here from a chart point of view. 14 cents, 41 cents, good thing. I know, dealing with some of these smaller companies, right? For those who don't know, Canada is just filled with miners, like gold miners, junky miners like that. Technical analysis doesn't help you there. It's just more of, did they discover something? Do they have gold? What's the price of gold is? How easy is it for their gold going to be to get? All that kind of nonsense. All right, last but not least here with ADUR. I'm just going to end it a few minutes early just because I got to run to a meeting, but I always appreciate you coming by. And this is just one I love. Just love this. Clean technologies, whatever these guys do. Just a solid uptrend, clacking against all-time highs. To me, that's perfect. I want to see companies that break and then hit all-time highs. There's massive studies done, and you can look at these things if you want. If you're a nerd like me and you actually want to read the studies, there's a whole bunch of studies done just to show what happens if you buy stocks that are hitting new all-time highs versus what happens if you buy stocks hitting new all-time lows. And if you buy stocks hitting new all-time highs, you do better than ones that are hitting new all-time lows. So that's why you see, anytime I see something that's at an all-time low and it hasn't put in that big low base or had any chance to recover, I'm really weary of it because it's at an all-time low. Things that are hitting new all-time highs, well, generally speaking, that's going to be a good thing, right? Before they break out and move higher, they have to go through all-time highs at some point. So Yeah, that's a good one to end it at. I actually like it from a short-term chart too. It's a nice looking little bull flag here. So if it breaks through those all-time highs, have at it. Just know that every all-time high is potentially a top, so have some sort of plan to get out on the way back down. But you'd be doing much better if you're scanning for stocks that are within X of all-time highs than if you're scanning stocks that are within X from all-time lows. So as always, I appreciate you guys coming out. I like it when I can get some ideas for free from everyone. And as always, again, thank you, and I will be back.